Hello and welcome to the Morningstar series, Why Should I Invest With You? I'm Emma Wall and I'm joined today by Hjung Lee, Head of Asian Equities for Barings. Hello, Jin.
Hi, Emma.
So I'd start by saying Happy New Year.
Happy Chinese New Year, the year of the rooster.
Indeed, and last year was the year of the monkey, which was supposed to be unpredictable, which in terms of politics and macroeconomics, it certainly was. But in terms of markets, actually Asian equities did quite well over the last 12 months, despite people being nervous about the market, up 9%.
Well, as we have been saying for quite a while now, the fundamentals and really the equity market outlook for Asian equities was not as dire as perhaps the market was pricing in. Now, there is volatility, no doubt, and there is sort of what we call tail risk or event risk in the horizon. But I think the underlying fundamentals still remain what we thought they would be. Of course, there are challenges and potential pitfalls for the Asian markets. Of course, one of them is continuing slowdown of Chinese economy, but that's all sort of what I call normal type of stuff. It is not financial policy, nor is it how is commodity pricing going to differ. So, in terms of that context, I think again, Asia and the emerging markets in general were outperforming for most of the year last year. And then you had some turbulence with the U.S. Presidential elections as well as the rate hike. And there was some volatility there. But again, as you see in year to date, although much too short to say anything. But again, we've gone back into that pattern where you're seeing more and more interest build up in emerging markets, especially in Asia.
I'm glad you mentioned President Trump there, because I suppose he's the spectre on the horizon for China and Asian equities in the way that he wasn't this time last year. This time last year, he was definitely an outsider. There's a lot of talk from Trump about China and China policy. Obviously, that's something for politicians to be concerned about, but for an investor in Asian equities, should they be concerned about that?
Well, certainly. I mean, in cases where there could be trade friction, as indeed there already seems to be between the Trump administration and other countries. Again, that was one of the things that I meant when I talked about a little bit of an event risk in the horizon. I think from our perspective, certainly that is a concern for us in the short term. But even if that occurs, I think it will, hopefully be contained in that no one really benefits from a sustained, let's say, trade tensions. I think in terms of the equity markets, it could cause some turbulence, but for us, of course, we will be looking at that kind of volatility as both opportunity and as well as threat.
I suppose there's one thing to say, that unlike 10 years ago where China and Asia were heavily reliant on the US consumer in order to grow the bottom line of both business and the country. They are now much more self-contained, and the trade within the Asia region between those countries is growing daily, isn't it? So in a way, they're increasingly self-sustaining.
Yes, thank you very much. You seem to, I think you should write our strategy. I think that is precisely what one of the points that I like to point out to our investors, in that Asia has sort of its own internal growth engine, if you want to call it that, and that will, barring sort of extreme cases, black swan events, if you want to call it that, that will continue to run. And it might not be the most exciting thing in the world, but just steady economic growth, steady corporate earnings growth, hopefully, and in the long term, of course, personal income growth, and that's going to drive domestic demand growth.
And what about where you're seeing those opportunities? Because obviously with a rising market, there must be some sectors that are looking quite expensive and others that perhaps the fundamentals are more compelling?
Yes, if there is a sort of a unique, more unique characteristic of the recent markets in 2016 and year to date has been what we call the value rally, or outperformance of what are traditionally considered lower growth sectors and companies. And certainly there had been very, very cheap in terms of valuations before. And one can argue that many investors were sort of hiding away in more what are thought to be more stable, more predictable companies in sectors like consumer as well as healthcare. Again, that is fine as long as the fundamentals and the earnings outlook back that up. And indeed, we also have participated in the rallies, if you want to call it that, of what are traditionally called cyclical sectors. But for us, the earnings growth, the earnings outlook has to be there. And we're not going to invest in stocks or sectors just because their share price is down and perhaps they would have like a trading pop. So again, we are looking mainly at the long-term fundamentals, long-term earnings story, and long-term growth stories. So for us, in terms of day-to-day research, it's pretty much the same.
Hjung, thank you very much.
Thank you.
This is Emma Wall from Morningstar. Thank you for watching.